I've been asking Elon Musk's AI a lot of different questions about XRP. Grok has an important warning for all of you about this bull run, and when it thinks this bull run peak is going to happen. We talk about a lot of important factors that affect this on this channel, but Grok gives us some new insights that I didn't have access to before. I wanted to share this with you guys because I think it's really interesting and cool. First, I want to speak about what I asked Grok and how it answered, because I think this is quite important. I basically told Grok to look at past cycle tops and geopolitical elements like the Federal Reserve and interest rates and M2 supply, and give me an idea of when this crypto market top is likely to happen. Answer like a financial expert and give me a date that falls within 3 months. So Grok is basically took this knowledge and began by looking for trends in past cycles. Bitcoin, the most popular cryptocurrency, generally sets the tone for the rest of the crypto market. In the past, halving events have had an effect on Bitcoin's market cycles. These occurrences lower the block reward and cause supply shocks, which usually lead to bull runs. We may look at this moment in relation to previous cycle tops and what has happened since then. The 2012 halving is, of course, one example. Bitcoin reached its highest point in November 2013. About a year later, at $1,150, the pinnacle happened. In December 2017, roughly 17 months after the 2016 halving, when the price reached $19,500, the 2020 halving happens, and Bitcoin hits a high in November 2021, nearly 18 months later. And then there's the 2024 halving. Based on past patterns, the peak might be 12 to 18 months after the halving, which would put it between April 2025 and October 2025. I want to be clear that this is the highest point for Bitcoin. This doesn't mean that this is going to be the highest point for all the other coins in the crypto market. In general, altcoins reach their highest point a little later. That's how it has always been. Of course, 2021 was a bit of an exception to this norm, but this is what usually happens. You know that altcoin season comes when Bitcoin hits its first peak. Bitcoin hit $112,000 on May 22nd, according to new data. We have, of course, gone over $120,000 now. Grok may not have access to all of this information. As of June 2025, the federal funds rate is constant at 4.25 to 4.5%. This is because it was reduced by 25 basis points in December 2024. The Fed is being careful because it wants to keep inflation and economic growth in check. Expo suggests expectations of more rate cuts in late 2025 could be making the market more liquid and driving up crypto prices. This is obviously going to be a huge deal. We've seen the Federal Reserve cut rates in the past and how this has been good for the markets. Grok talks about that here. In 2022, rates will rise quickly, going from almost 0% to 4.5% by early 2023. At the same time, the crypto market was in a bear market and Bitcoin fell 78%. On the other hand, the Fed's rate cut on September 24th caused Bitcoin to surge to $80,000 per coin by November. More cuts in 2025 might keep the bull run going. But high rates that don't go down, or worries about inflation coming back, could make the market peak happen sooner by making people less willing to take risks. To put it another way, the Fed might not decrease rates. And right now we are extremely close to the market's high. I know that's not what any of you want to hear, though. There's a reason why Trump is so strongly pressuring the Fed to lower interest rates. Trump knows that the midterm elections are coming up. The stock market and the crypto market both have to do very well for the ride to go well. If the markets are performing well, Trump basically based his whole job as president on that. Is he a good president? And so Trump knows this, of course. He claims that we can't have tremendous growth like we did in November, December, and January, because there isn't enough liquidity. So, if we want to see anything like that again, the Fed needs to lower rates? That's why he's putting so much pressure on the Fed and Jerome Powell right now, and trying to do everything he can to make sure it occurs. M2, which measures worldwide liquidity, has a strong connection to changes in crypto prices. A historical correlation of roughly 0.75 with the S&P BDMI crypto index is a favorable sign. Other indexes show a higher correlation, around 90%. But 75 to 90% is still a very high correlation when it comes to price action. So, if you don't know what M2 is, it's the amount of money in the world, right? Digital assets cost more when there is more money in the world. That's the rule of thumb. On May 25th, US M2 rose from 21.86 trillion in April to 21.94 trillion. Showed that liquidity was growing slowly and that other countries were using loose monetary policies like quantitative easing. Of course, this did assist us obtain some decent price action not too long ago. What we usually find is that when a country like Europe or China reduces rates, as a result, the world's money supply goes up relatively quickly. Anywhere from 3 weeks to 3 months later, we definitely observe tremendous increase, and that lines up almost precisely with what was going on here in May. Of course, if we see further quantitative easing, money printing, or other stimulus, it's conceivable that the price of digital assets will keep going higher, while prices go up too. There are also a lot of various geopolitical issues to think about. You should know about things like the Genius Act, the Clarity Act, Gary Gensler's replacement, and the Strategic Bitcoin Reserve. There are also trade tariffs, which we've seen have some effects on the market as well. There are a lot of different things going on here, but Grok puts it all together and gives us this synthesis and estimate. In short, Grok says that the historical cycle piece suggests a peak 12 to 18 months after the halving, which fits with a cycle top from April to October 25th, but Grok really feels that this time, crypto market will probably reach its highest point between July 1st, 2025, which is basically what has already happened. And September 30th, 2025, this 3-month period takes into account the timing of past cycles. If that happens, the Fed is expected to decrease rates in July and September. There are also possible geopolitical or macroeconomic events that could start a distribution phase. I want to be really clear now. I believe Grok's guess here is a little bit off. I'm going to explain why. But first, I asked Grok one more question to get to my point. A lot of individuals predict that the Fed will start decreasing rates in September and keep doing so until the first quarter of 2026. What is likely to be the market peak in that case? When will it be? So the Fed looks over all of data and says, based on this information, we can see that the peak is most likely to happen between January 1st and March 31st, 2026. This 3-month range shows how the Fed's monetary policy and rising M2 have made the cycle longer at this time. I believe that it is becoming less likely that China or Europe will keep doing quantitative easing. They don't have much more space to move. That's the main reason I said that. There is still some doubt about that. In short, everyone is just waiting for the United States to start cutting those rates. So I believe that the first quarter of 2026 is a fair guess for when this cycle will end. Could be hit because the Fed is taking too long right now. But this is only possible if the Fed lowers rates again. Grok said that if the Fed decides to leave the rates the same and doesn't want to cut them at all, there's a very good chance that we're going to reach our peaks somewhere between now and September. So that's something to think about. I think it's something that we should definitely pay attention to. And it's likely that, it's very likely to happen. I think it's more likely that the